Salam sejahtera, anda bersama saya Rizal Zulkafli. Ini Bisnes Awal Ni dan tahun 2013 berakhir dengan keputusan The Fed untuk mengurangkan program pembelian bonnya. Ini selari dengan data yang positif dalam ekonomi Amerika. Namun apakah kesannya kepada ekonomi Malaysia dan juga pasaran modal Malaysia? Untuk melihat isu ini, kita bersama Ketua Ekonomi RAM Holdings, Dr. Yah Kim Leong. Doctor, first of all, let's talk about the US economy. I think with the Fed tapering its QE, we see a clear sign that the American economy is doing quite well. And will it return to the condition pre-2008, or are we seeing that already?
Okay, the Fed actually sent out a signal in May last year to suggest that there could be a tapering off towards the end of the year or towards 2014, which is this year, depending on the performance of the economy. And the positive sign here is that they have started the tapering off earlier than expected. In fact, it is just a mild tapering off by reducing about 10 billion purchases a month. Yeah. So in a way, it is an indication that the US economy is beginning to show brighter signs of stronger recovery. And this is shown by the fact that the third quarter GDP growth actually was revised upwards to 4.1% for the US economy, and that is up from 2.2% in the second quarter and 1.8% in the first quarter. So we are confident that the US economy will likely exceed the 2012 2.2% growth, which means that last year the US economy is likely to hit close to 3%, and the expectation here is that 2014, which is this year, the US economy is likely to perform better than expected. And of course, that has sent a lot of fears that the tapering off could be much more faster as well as in greater magnitude. And that has in a way, allayed some concerns that the tapering off would be in a measured pace, you see, and that is likely to calm the markets, especially in the withdrawal of capital from the emerging countries.
But with the tapering, we see the market performing more in line with the economic fundamentals, which is weaker compared to the period when tapering was at its peak in that sense. Do you foresee Malaysian financial market, both equity and bond, to be affected by this? By this, in terms of will we see more funds leaving this country back to the States?
When we look at the first episode, when the tapering off signal was sent, there was an outflow of close to 20 billion ringgit in terms of withdrawal of capital from the Malaysian capital markets, both the equity as well as debt. That has resulted in the US, yields has picked up by close to 100 basis points for the 10-year bonds. And if you look at Malaysian bonds, there's only a slight impact of 40 to 60 basis points increase in the 5 and 10-year Malaysian yields. So while the impact has translated into slight pickup in yields, but it goes to show that we have sufficient liquidity to offset the withdrawal of foreign capital from the Malaysian market. In fact, since September last year, there was in fact an increase in foreign capital inflows back into the Malaysian market. But now that the tapering off has started, we do see a much more rational and much more controlled kind of reaction particularly from international investors. So we are quite confident that international investors now are differentiating markets that have stronger fundamentals compared to those, like for example India and Indonesia, that are currently experiencing twin deficits. And those are the countries that perhaps would suffer more from a stronger pace of tapering in this year. See? But in the case of stronger economies like Malaysia, where the fundamentals are still relatively intact, we do foresee that Malaysian financial markets, given the surplus liquidity, would be able to absorb that kind of outflows.
Having said that, we see ringgit going slightly traded slightly lower the end of the year and the beginning of 2014. Will that continue, or how will that be in relation to the tapering? Because I think, because right now it's just 10 billion, but when it goes down to more and more as we go along, will ringgit suffer?
Okay. I think the US dollar has strengthened, partly because of its stronger growth prospects as well as the underlying fundamentals, given that it has grown faster than expected. That's why the currency strengthened against all other countries, including the hard currencies. And of course, the emerging markets, especially those that are export-oriented, will have some offsetting effect, because a pickup in the growth of the advanced economies will actually increase the absorption of imports from these emerging countries. So Malaysia will benefit. There will be offsetting effects should our ringgit weaken, and that should help to address some of the, recover some of the strength when the export numbers show that it's a strengthening, and that is translated into a widening of our current account surplus. Okay. So the earlier concern of a weaker ringgit because of a wider current account deficit, I think that will be addressed when the trade numbers come out to show. Because of the weakening of ringgit, it actually boosts our exports.
And with the tapering, because I think the government projected the economy to grow at about 4.5 to 5%, but that was made during the budget tabling in October. With the tapering of the QE, do you foresee the need to revise these figures?
We don't think so, largely because the tapering will have an impact on the financial channel of transmission of the shocks in the financial system, in the form of perhaps an increase in the interest rates. But what will offset the financial channel is actually the trade channel, the trade and investment channel, because Malaysia has a so-called a very strong, very open economy in the sense that imports and exports make up more than close to 200% of GDP. We will have a stronger response in our trade and investment when the advanced economies pick up more strongly. So Malaysian exports will actually benefit from the pickup, and that will help to offset the effects of the tapering off, which actually is just mainly will cause some volatility in the financial markets.
Will the positive signs coming out of America also help to offset the lower domestic demand expected later part in 2014 and 2015? Correct.
We see some moderation in our domestic demand, and we project, in fact, our forecast is towards the higher end of the 5 to 5.5% projected by the government, and we believe the Malaysian economy, because of the stronger export demand, will actually help Malaysian to achieve at the higher end of the growth band. You see, so we are quite positive that the external environment will help to drive Malaysia's growth this year and as well as next year. And despite the fact that the domestic demand, particularly household spending, will face some headwinds because of the rising price pressures.
When you say external factor, any particular countries you have in mind besides America? Because I think Europe, we still see them trying to sort things out. Yeah. China, maybe 7.5% for 2014. Correct. So which external demand are we looking at moving forward?
I think Malaysia's external sector is very well diversified. We have exports going to Europe, to China, and then to US. You see. So we will benefit. In the case of China, as long as growth is stabilized around 7 to 7.5%, we will still be able to benefit from increased demand and exports to China as well as the rest of Asian countries. And of course, if Europe and America picks up strongly, Malaysia will benefit, because more than a quarter of our exports actually goes to these two regions. And overall, given that the industrial economies are performing much better than expected, Malaysian export should have a much brighter prospects this year.
With the subsidy rationalisation, moving forward, do you foresee Bank Negara maybe revising the OPR second half of 2014? What do you see?
If you look at the current inflation environment, we are just about hitting the 2% mark. And we think that because of all this subsidy rationalisation, it will likely cross the 3% mark by the middle of next year. Although central bank will likely take a so-called a more cautious view as to when to raise the interest rates, but we think that any increase will likely come perhaps in the second quarter or even the second half. You see, we think that any increase will likely to be very gradual. 25 basis points is what we are looking at for the rest of this year. Although if growth picks up more strongly and inflation pressure also rise, then perhaps there's stronger reasons for central bank to raise the interest rate. The other point to note is that a higher interest rates, level of interest rate will actually benefit our depositors, you see, given that the depositors, the savers are taking the brunt of the current low interest rate environment. You see. So we also must not forget that a rise in interest rates will actually benefit the savers as well, and that will increase their purchasing power.
But that will not mar the growth of the country.
Yes, we think that the credit growth will still remain strong, although we expect some moderation from a double digit to perhaps a high single digit, or 8 to 9%, and that should also, at that level, domestic demands will still continue at a fairly strong pace of, I think, quite easily, private consumption can hit 7 to 7.5% this year. And that should help because it makes up about half of the GDP. So easily from private consumption, you can get at least 3 to 3.5 percentage points increase in our GDP.
Okay, thank you very much, Dr. Ya. Let's have you again every quarter so that we can revise or we can review what you've said this time around. Thank you very much, Dr. Ya Kim Leong. Dr. Ya Kim Leong, Ketua Ekonomi RAM Holdings, membincangkan tentang kesan pengurangan pembelian bond The Fed kepada ekonomi dan juga data positif daripada ekonomi Amerika dan juga bergerak ke hadapan prospek untuk negara. Dan kita akan berhenti berehat seketika, kembali selepas ini.